Well, I am in a unique aspect of real estate. I am in the note buying business. So essentially, instead of buying the property, you buy a first mortgage on somebody's property. And you're the bank, you're not a landlord. And that's what I've spent my last 45 years in this world doing, is being in the note business.
Wow. All right. So buying first mortgages. I don't know if you want to expand on that just so that people know, like, where do they find these? How do they buy these? There's a million questions
All
to
right.
start.
So we'll try to go through it quickly. I bought 50,000 notes, so it's
Whoa.
kind of my thing.
Yeah.
And I've run a school. I started a school about 25 years ago called Note School. And we teach people the art of buying notes, right? What is the risk factors? How do you invest safely? How do you find notes? How do you find notes that are likely to have a good experience? How do you have a third party do most all the work for you, have it serviced, do all that kind of stuff? And all of that is what Note School is about, is teaching people this journey of finding notes. That's what we do.
All right. Well, in our like 15-minute chat here, maybe we could do this at the 100-foot level just so people
Sure.
have a grasp of how this would kind of work. So I've done some research on notes. I've never actually bought one myself. Full disclosure, I did do one of your webinars. I think I mentioned like 3 years ago. So I do have a little bit of knowledge in it, but I'm not going to say that I'm knowledgeable in this at all. But I'm guessing you're buying these at a discount. You're not going to be paying full price for these notes. Otherwise, it wouldn't really make sense, would it?
Well, it could make
Could
sense.
make
Let's
sense.
just
Okay.
say that I had a loan that was 70% and the interest rate was 11%. You could
Yeah.
buy that note at the full face amount and you're going to make 11% interest on a first mortgage. That's a
Right.
safe deal. So the one thing that you'll find about us, people say like, Eddie, just give me the quick, right? Tell me the three things that make notes better than rental properties. Okay? Pretty
Yep.
simple. Stress. You can own 55 rentals and 1,000 notes for the same level of work. Number two is cash flow.
Okay.
You can earn essentially about 2.5 to 3 times the income per month, net income on a note you can on a rental. In the United States, in a market that seems that people like for rentals, it's that much better. Okay?
Yep.
And number three is cushion. If somebody buys a rental, they don't have a lot of discount in it. And if something goes wrong or the house gets tore up or just whatever, the market goes down, they got market risk of that happening. But when I buy a first mortgage on somebody's house, if I invested $200,000 for the mortgage, the house isn't worth 200,000. The house is worth 250. It's worth 300.
Right, because they
So
had a down payment.
I have a cushion built into that mortgage that I wouldn't have if I were buying a rental. So stress, less stress. Cash flow, way more cash flow. Cushion, way more cushion. Those are the three things that if you ask me to do a quick comparison, and I can tell you right now that we could look at 100 sample deals. And you're like, wow, Eddie, I can check yes in all three of those blanks in all of those 100 deals. And I'm like, yeah, I know.
Okay. I think where people's heads go whenever we start talking about something that sounds so good is they want to talk about the opposite. They want to talk about the risks. They want to talk about, like, what happens if they don't pay the mortgage? Like, how many of these houses do you have to take back? Are you looking to invest in the US? Are you looking for a coaching program that will actually save you money and help you avoid mistakes? My students get discounts on lawyers, attorneys. If you're looking to get an E2 visa, if you're looking for certain software, if you're looking to even speak with CPAs, I have discounts for all these things. If you want to just get on a quick phone call and we can discuss if it's a fit for you, 10-minute phone call, go to glensutherland.com or at canadianinvestingintheusa.com and book a call. Is it?
So we underwrite loans to have a 3 to 5% projected default rate. Nobody can underwrite deals to have a 0% default
Right.
rate. That's not possible.
Right.
But we're just above Fannie Mae, Freddie Mac here in the United States, right? And I've been doing this 45 years. We've got billions of transactions under our belt. So we are speaking from experience when we build out a risk blueprint. And we've defined variables that say high risk, low risk, right? All the way down the line. And we can take a deal and apply that to it. And we just have been doing it for a long time. So first of all, here's what I believe is really important. A lot of people make investments with no information. The guy's a good talker and he sounds like, invest with me. Nobody's ever going to lose money. You ever hear that pitch before, right? And so I would say that what you hear from us is the first thing we're going to do is we're going to give you some education and some clarity of what this looks like. And when you do that, then all of a sudden you can make some very informed decisions. We've been doing this for decades, and we've had a school for 25 years. So we can clearly show people, put my hands on something that gives me a comfort level of what I'm investing in and why, what risk variables are they. We're very good at that. Right? I start out with, let's just focus on the most important part is let's figure out if you even like it. There's no point in learning a whole bunch about something that you don't like.
Right.
Right. I don't want to go be a painter. Right. I don't want to paint houses. As a kid, I experienced that and it wasn't really very fun. So I'm really not interested in learning a million things about painting houses because it's just not going to suit me, right? But I like buying notes. And I would say that most people like you, Glenn, like buying notes because it's an incredible alternative to rental investments. It's not saying that you have to go sell every house you have and sell or finance it, although you could. It is simply saying that we're showing people how to do things that otherwise they just didn't even know was a possibility. And let me ask you a question. Okay. What is the tallest building in most every city?
What do you mean? Like, isn't it
a bank?
Oh, okay. Yeah. So probably, yeah. Oh, you meant the business inside of it. Yes. Yeah. It's probably.
Oh, there must be something to this, right?
Yeah.
We're just showing people how to be the bank.
Yeah. So if you're trying to show people to be the bank, is this something that you need to have a lot of money in order to be able to do, right?
So there's two sides of the fence. There are people with investable capital and they just want to get some money parked. And a piece of note school on a long-term basis is that group, right? These are people that want to invest money. They've got 100,000 to
whatever,
10 million bucks. Yeah. And they haven't found investments otherwise that they like the math on today, which is pretty common, right? The other side are people that say, I don't have $1 zillion. And we say, okay, well, let us show you some techniques that we've done excessively, showing you how to raise some money to go do the business. How do you find other people's money? I've got self-directed IRA companies here in the United States that say, Eddie, we've known you for 25 years. Your people that buy notes get their money back and they're good investments and they don't hate the investment at the end of 10 years. They love it.
Yeah.
And so what if we could help you fuel some of your students buying notes by providing some capital to them? So there's all kind of ways that we have helped people find the money in the business. You can't get to number 2, which is finding the money, which we can clearly show somebody how to do until you understand number 1, and that is what is a good deal.
Yeah.
And so that's the sequence that the school starts through, is to show you what is a good deal.
Okay. Just on like the raising money, because I do that myself for like syndications and for like single family houses. This might be like too in depth or into the course too much, but how do you structure this? Is this like a joint venture, or is it like just a Are you looking to buy property in the United States, but not interested to travel there just to sign the notary? Did you know there are 6 different ways to sign notary as a Canadian, and only 2 of them involve going to the United States? To get my free guide on notary, go to acanadianinvestingintheusa.com/notary. straight.
Usually it's one of two ways. Usually it is either you have a scenario where you assign the note to the passive investor, but you are due future payments. And so it's at a third party servicer and you assign the note to them so they have complete control.
Yeah.
But there's a buy sell agreement that says you're supposed to get future payments. It could be that you're keeping part of the monthly payment every month. It could be that you're going to sell them the payments for all of your payments for 10 years and then you get the loan back after 10 years. You can also do it where you borrow money against a note. So you just simply structure the deal. A note is an asset. We think it's a really safe, clean asset. It's way cleaner than a boat or a car, right? And it's at a third party servicer, and you can just simply loan money against a note. And those are two of the simplest ways that a passive investor who's not involved in finding the note and doing all the due diligence, they can make it, they can take their money and invest that money safely, knowing that note is the underlying security if God forbid something goes wrong.
I like it. Okay. How does, like, I know you said you had like a, I don't know if it was an app or part of the website or part of the coaching was going to teach you how to determine what the risk level or what the likelihood of default was. Does market cycles play a part in that? Because we're going through kind of a flat market or slightly declining. And it also depends on the state and the city and everything right now. But does that play into this whole thing?
You see the lines on this face?
Yeah, well, you said you were doing it for so many years, right?
I'm from Texas, right? This ain't my first rodeo,
Yeah,
right? This is absolutely positively something that you have to weigh every variable: market influences, market conditions, local situations, what the property is, what the, like all of those things. And I've lived through at least 6 cycles in the entire industry. 6 times in 45 years, I've lived through a cycle.
yep,
And so I would say that timing is everything, and the timing for notes is the best I've seen in a long time. Timing for rentals right now is not too good.
yeah,
And that's because in 2008, you could, or excuse me, 2018, you could buy a rental if you paid all cash and you could earn about 8% per year. You could take the identical house today and you're earning about 4%. I can instantly show people how to go from 4% to 10 to 12. Well, that's pretty good.
right. Okay.
And I think your money is safer than it is in a rental under today's conditions.
Yeah, because you're not going to have, I guess, the
It,
exposure to the market. It's going to be predictable.
right. And everything I'm saying, Glenn,
Yep.
know that I could have a waterfall in an hour and a half to explain every possible scenario. So I'm just making statements that later I can take to a much deeper level and explain why I would say what I would say.
Yeah. Okay. Um, just if because I know what if I was going to have this conversation, sell it to somebody, that I think they're going to ask me like, what do you do if you actually someone does default? I'm guessing you take the house back as a foreclosure, and then how do you dispose of the house?
So you're going to have a servicer,
Yeah.
and they're going to generally do the foreclosure management. So a loan servicer has got a connection with an attorney in that state and a connection with this and that. They're going to have property preservation. So if they need to have the house winterized or they need to have the, electricity cut off or that whatever, like there's vendors today to go do all that kind of stuff. And a competent servicer is going to have access to those type people. You don't have to go know everything to go do this, right? The second thing is, how do you dispo it? And the answer is, it is 20 times easier to dispo a foreclosure today than it was 15 years ago. There's websites, there's systems, there's people that specialize in helping you like there's special listen, I can call 10 different vendors today, Glenn, that can give me a list in any zip code in the United States of the top 20 to 100 people that pay cash for houses in that market. I don't need to call a realtor anymore. I can, and I'll show people how to call a realtor and have them sell it. But the access to information of people that would have a tolerance and an appetite to buy that kind of property is drastically different than it was. Technology has changed how you would get rid of a foreclosed property.
That makes a lot of sense. And I haven't seen it myself, and I've only been investing in the US since 2016, and it's changed a lot. It's made things a lot easier to buy short sales, foreclosures, to buy all that stuff. It's gotten so much easier. Eddie, this is really interesting stuff. I know, like I mentioned at the start, that I did one of your webinars. If someone's like, yeah, I want to know more about this, I want to learn, I want to get, because we did like a 10-15 minute call, and we did like really just skirted the top of this. If someone wanted to find out more about this, where do they go to track you down?
So I would like to give them what I would call essentially an opportunity training. I'm going to give them some good leave behind materials. So they're going to get, a book and with questions and answers in the book. They're going to get, kind of an Excel spreadsheet where they can play with some numbers. They're going to do all of this stuff. And then we're going to have like about an hour, maybe a little over an hour, where we go sit down with them and talk about, where we're at in the market and how somebody progresses. Now, let me say this. What we want to do is identify the opportunities. And then we have classes where people can then do a deep dive into what that means. Okay. So once again, it is noteschool.com/invest USA. And so that is more specifically then going to give them the latitude, give them the chance of like, okay, what is this like? And I would say to you is this: because you haven't heard of being the bank doesn't mean that banks haven't been doing this for 200 years.
They've done pretty well on it, I think.
And I've been doing it for 45.
Yeah. Eddie, this is awesome. I always love these ones where there's stuff to learn. Those are my favorite podcasts, and there's definitely some people probably got their eyes lit up a little bit from hearing all about this. Thank you so much for coming on the show. I really appreciate you sharing all of your expertise with us.
Thank you very much.
That was a nice video. Bye.